The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Thanks for tuning in. If you have any questions, it's 877-927-6648. Today's the Commodity Hour. I want to cover a little bit about basic economics because a couple things happened overnight. One was the People's Bank of China dropped interest rates to stimulate, and I wanted to show you a chart on that. And also I wanted to bring up a couple of things that I get from Bob Prechter at the Elliott Wave Theorist. He has some really good long-term historical charts, and I posted one into the Tiger TV for you folks to look at. And it's basically the same chart that we're looking at with the Treasury bonds, only it's inverted. We're looking at the Treasury bond price going up to that 151 level. And what Bob is doing is he's looking at the long-term interest rates on notes going back 40 years, very similar to what we were looking at. And as you can see, interest rates have made a bottom as far as yield, going below 1.45% in the 10-year note and below 2.5% in the 30-year T-bond. And that chart is just showing you, the oversold condition. Now, we've got, each time, we do a show, a couple days pass and we get more information. And we've been watching the open interest in the Treasury bonds and Treasury notes, and the open interest has had a pretty dramatic drop of 10% when it went up in the new highs on Thursday and Friday. And now the market has dropped about $5,000 per contract in the Treasury bonds, and I believe it's trapped some people. Now, the second chart that I've posted into Tiger TV comes from the Financial Times, and it basically shows that the long-term hedge funds are, not long-term, but the hedge funds are net long positions in the 30-year T-bond. And as you can see, they put that position on, during May, and, we have reversed really quite a bit in just a matter of a few days. And if they've trapped these folks in here, much like they did in the bottom in May and also the bottom in March, then the market will be, incredibly, volatile, and, more to the downside will be seen. We're looking for much higher interest rates, coming down the road. So what we're going to do is we're going to watch for a retracement. I'm going to make a recommendation that if we get a 61% retracement in the Treasury bonds or Treasury notes, the notes are, 10 years or less, bonds are 30 years or between 10 and 30 years. So if we get a 61% retracement, I believe that would take it up to about the 150.5 level in the Treasury bond. I'd be looking to be a seller there with a stop above the high. This has a potential to be a real monster. I know we put the TBT on and we were stopped out right at almost the exact low. But we'll re-enter that at another time. So we need to keep that in the focus for it, because it's very important as far as the trading, in my opinion, to take a look at it. Now, the next thing that we need to do is I would like to talk a little bit about this news that came out of China last night, where they dropped the interest rates 0.25% and dropped reserve requirements at the bank in China. And the reason why they do that, folks, is because they're not able to, nobody's borrowing money. It has nothing to do with the price of money. It's just nobody's borrowing it. That's part of the problem that we're having here in the United States. The only way they can get people to borrow money is through the Fed. They issue the bonds, and that causes the rates to go down, and this is not good. What the Fed is trying to do is to, walk us through a business recession and not have any trouble, and I believe they're making a huge mistake, but, only time will tell, and we'll have to wait and see. But the next chart that we want to take a look at into Tiger TV is the one that shows the chart of the interest rate structure of the S&P 500 versus the People's Bank of China, with their 1-year lending rate, and it shows that, when they dropped the rates back in '07, it was mainly because they were getting scared, and that's the reason, why the market, was another reason why the market started to come down. If you'll recall, everybody says that, China is going to have, save the world, and now China is having a hard time saving itself. They were saying it was going to have a 10% GDP, almost forever, and now they're barely at 7%, down from 10.5% in just a matter of a few months. And so we have to, keep this in mind, that this historically what's happened is just something that's happened again, and we want to be able to watch it to see that, that if it does occur, this is the thing that we watch for. So this is another piece of the puzzle, that we're looking at, and that's just part of what we do as traders, and that's what, our basic format should be. Now, I wanted to talk, I'm going to jump around here a little bit before we get to the commodities, because I would like to, show what we were looking at yesterday, because we have this P-index date that came in yesterday, and there's a possibility, like I said, it could come in as early as Thursday morning. And, what's happened is, yesterday I was looking the market to go to 1308 to match that other, retracement that we had, back in on May 20th. But what in fact it did, the market extended past that, and that's why I felt that if it went above 1313, it was going to go up to that next level, which was between 1320 and 1325, which is in fact, what did happen. And we went up there to that level. Now, it's very important today that I'll put this up here into Tiger TV, so you'll be able to get a better look at it. You'll see that it went exactly to the price that we were looking at on the second part of that, because it didn't stop at the 618. It went all the way up, to the 786 level, and this thus far has not gone below it very much. Okay, now we want to get to the commodity markets. I think the one that we need to look at is the gold market, because we've had some real interesting things happen today. The gold went up to the exact 382 and 786 retracement, and stopped exactly at the point of 1640. And so we know that we're in the first part of the correction on this. And what I will do is I'm going to go to the shorter term chart on gold that I actually made a picture of this a few hours before the market opened, because I wanted to show what was going to happen, if gold was going to hold this level, and how we watch these prices unfold. And if you'll take a look, if you go into Tiger TV, you're going to see a 30-minute chart. I believe it's 30 minutes. Yes, it's a 30-minute chart on gold, and it's going to show the low that we made down when we made the 618 for the sixth time down at the 1532. We rallied $111 per ounce, and now we have backed off, and the two places where it should have stopped was at 1581 or at 1566, and so far the 1581 is held. The market's rallied about $10 from there, so it's held the first retracement. So this is important if you're bullish to gold, because as long as it can do that, it's telling you that the market has a real strong probability of having a pretty good rally to the upside. Now, on the open interest structure for this, we looked at the gold and silver last night, and we've had a nice increase in the open interest in gold of about 5% over the last couple of days, so we've got new buying coming in. We've had a small increase in silver, open interest not as much, but it also had a small increase in open interest. So both of those, are holding up, relatively well. And I would be looking to, be a buyer of gold if you really like gold, and I do like gold. I would be looking to be a buyer somewhere between the 1581 and that 1565 level. Now, the high today that gold made, if you'll look at that the daily chart that I posted into Tiger TV, you'll see that the high today came in at the exact 382 of the big high we made several weeks ago, and then also it came to the 786 level of the high made 2 weeks ago. And so both of those numbers came in exactly at 1642 per ounce, and the high was 1644. So that is where you get multiple numbers coming together that tell you that these are resistance levels. And if you watch it, on a 15-minute or 30-minute chart at those levels, you can enter, without risking, an arm and a leg. And that's the thing that we're trying to do when we're watching these patterns unfold. We've had a pretty big resistance area being hit in the euro overnight, and actually it was mid-morning this morning, up at that 126.20 area that we'll talk about after the break, because we need to talk about the U.S. dollar index also. So that is that's something that we want to follow when we get to the break, as we'll be coming up here to pay a few bills here in a minute. But the GLD, Basil mentioned sorry for the pronunciation. Basil mentioned it on his show, is the fact that the way the GLD hit the number that he was looking at, and that was the same thing that we were looking at in the futures market. Only the difference is the GLD doesn't trade 24 hours, so you don't get some of the same patterns that unfold the same way. So the gold and silver still look bullish as long as we can stay above 1565 in the gold. That's something that still looks like it's going to be pretty good as far as holding up to where we think we are. Now, I want to cover this just briefly before the break, and I've had several people ask me about the P-index date. It was due to come in on the 6th. That was yesterday. I said, it only has a one-day band. It could not have come in on the 4th when the bottom came in, because that's a two-day band, and that's too much. Now, whether it released on the 5th and that was a major bottom, or the top came in today, I am not sure as of yet. Once we start down, if we do continue down from here, that'll give me some more information, but it will look like a spike on the chart. Unfortunately, these things are not as easy as you'd like to think that they are. Now, if it would have come down hard into the 6th, like I was anticipating in the market, then we would have had it, said, no question about it, this is a low. But because, the bottom of the market came on the 5th, which was the full moon and lunar eclipse, and then went up into this P-index, which was due on the 6th. Today's the 7th, and so we will see if this is, in fact, going to be the day. Now, if we close really strong today, above 1325 in the S&P, then this certainly, the P-index date either came in, 2 days early, or it just didn't work at all. So I don't know what the answer to that is. Longer term, I'm still bearish. I think what Basil said on the show is that what this market is doing is it's telegraphing that we've got more volatility coming. We've had very little volatility in this market for quite a while, and I think we're going to start seeing more and more of it. Okay, we got to pay a few bills here. If you have any questions, it's 877-927-6648, and we'll get back. We're going to cover some crude oil.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and we want to talk a little bit about crude oil. I've put into Tiger TV the fact that, we've had this big 786 retracement completed in crude oil, and we've had a pretty strong rally coming off that bottom. We rallied well over $7 a barrel, and what we're doing now is we're coming down into a hopefully a 61% retracement coming in around the around the 83.50 level. So you need to watch 83.50 really closely in crude oil if you're active in that market. Now, today's high was at the 87 level, was exactly 786 coming off the high we made in late May. And then we went down into that right to the 81 level, which was, we were looking at 82, so it went about 90 cents a barrel under what we were looking for. We've had the rally. So the thing that you want to watch for if you want to be bullish to crude or you're trading DTFs, or to watch the retracement that will be coming in. We've had this, if you'll notice the big reversal that we've had today of $3 a barrel in the crude tells us that we're probably going to go down another few dollars a barrel to test that 61% retracement that comes in at the 83.50 area, roughly at that spot. So that's what you'll be watching to see if these commodities are going to hold up. Now, we had a big move in these stocks, and the question is whether they're going to, maintain this bullish enthusiasm. But, we'll have to, give it a little bit more time, before we're able to, take a look at this. Now, as I mentioned on my show yesterday, we had this, big 786 retracement made in the commodities, basically, using the DBA as a guideline, but frankly, a lot of them look the same way with these commodity ETFs and commodity funds. They look very similar, and we hit the 61% retracement in the commodities back in December. We rallied up into late February, and that signaled that it started to head down. We gapped down really strongly after that. Much like, we're having in bonds, we're really breaking, some, wide-ranging bars to the downside. So we did continue down in the DBA down to the 78% retracement, and now we're testing that. And this is why, we need to look. If you're in the commodities, and I do a lot of commodities, so I'm watching the grains. I'm watching what's happening with sugar and what's happening with corn and wheat and all these things, to see what's what's looking at. Now, sometimes I sound like a broken record here, but one of the best things that you can do for yourself, and we saw this happen in Apple a few weeks ago when it was down at that $530 per share level, where it had a beautiful AB equals CD, and just about 4 days ago on the full moon, we had that exact same pattern occur with soybeans down at the 1330 level, and they've rallied better than $4,000 a contract in a matter of just a very, very short period of time. And if you'll take a chance into Tiger TV and look at this soybean pattern, because it looks exactly like the Apple pattern. It doesn't make any difference whether it's stocks, futures, options, doesn't Forex. They all look the same because it's all people, trading the same thing. And we completed a perfect AB equals CD pattern there, and now we've had two really wide-ranging bars up to the upside. And this is partly a fact that the market was oversold, and partly the fact that we had a lot of weather that was very not too good for crops. But remember, we're only into June, and they don't harvest these crops until September and October. So, and we always have at least one or two crop failures. In the 50 years I've been trading this, I can never remember where we didn't get at least one or two crop failures, scares a year in some of these things. And so you have to be expecting them, and sometimes they can be quite profitable, and this is what our job is, to try to catch some of these. We focused on the new crop corn, December corn, the last time that we had the commodity show, when the corn was pulling down to the $5.10 a bushel level. Wheat was doing the same thing. And these are the things that we're going to cover, when we come back for the second half after we finish this next break. But what we're trying to do when we do the commodity show is to give you an idea of the overall direction of where we think these things are going, and an idea of some of the things of the supply-demand that are focused on as far as looking at these. So if you have any questions, it's 877-927-6648.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Basil Chapman on the air hosting the Tiger Technicians Hour and always wondered what's behind his powerful Chapman wave. Well, Basil has just announced a one-day online master trader course where he'll explain his Chapman wave methodology in detail so that you can learn how to chart Basil's one-of-a-kind formation techniques in real time while the market is open. Not only do you get a full-day online master trader course with Basil during live market hours, but by signing up now, you also get a free month of his newsletter, The Opening Call, a $128 value, along with access to his Moving Averages webinar, another $99 value. This online course takes place Friday, June 8th, and will be archived so you can view it as many times as you like for 30 days following the course. Make sure you take advantage of this one-of-a-kind Master Trader course with Basil Chapman during live market hours by visiting the front page of TFNN.com and reserving your spot today. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, I think we have a caller from Philadelphia. Are you there, John?
Larry, good morning.
How are you, my friend?
You, am I assuming correctly, you're still residing in Incognito, USA?
Yes, Incognito. It's a small town north of San Francisco, right off the coast.
Excellent.
My wife gets really upset when I tell people where I am. She said, "So people think you just travel everywhere and do all these fancy things." And I said, "No, I'm not trying to hide from anybody, but that's just the way she is.
Larry, hiding from somebody, I have my doubts on that one, sir. I have my doubts.
What can I do for you, my friend?
Question: do you have the capability of supplementing what you just posted on Tiger TV and posting up the weekly chart on soybeans?
Yes, I can certainly do that if you give me a minute. I mean,
very good. And while you're doing that, while you're doing that, Larry, I do want to pose the question to you when you do get that up, assuming you do, and that is, with this beautiful corrective pattern having given way to a rally that you just posted on the daily, wanted to ask, when you look at the weekly, do you foresee, pattern-wise anyway, the possibility of beans getting back up to the highs, and that would be kind of like the $15 a bushel sort of area?
Oh, they could certainly do that without any trouble at all, John, because we came down from 15.20 down to 13.40, so it's around $2 a bushel, and they moved $1 a bushel in a matter of a few days, so they can certainly do that. I can put this into Tiger TV, and you can see the long-term, chart on this, and you'll get a pretty good idea of what's happened. You'll see that wide bar that's happened over the last few days, and if it only corrects that much, that was only a 50% correction from the low we made back in November.
Yeah.
And if that's all we get, you have to respect this wide-ranging bar, my friend. I mean, it's very powerful.
Yes, very good. Larry, let me share with you and your listeners just a fundamental item here on the soybeans. First and foremost, the price of soybeans has rallied quite significantly, as you mentioned, from December up into April. And the fundamental driver for that price increase was a crop failure in Brazil. The crop, there certainly was a crop but the crop came in 30% smaller than what was expected when they first put the seeds in the ground, and that was just on account of an incredibly dry and hot second half January, February, first half of March. And so you just had fewer beans grown in Brazil, so the inventory situation's gotten much tighter. And so the market is dealing with that. Now, you might also recall, here in the United States, we had, record-setting warm winter, November, December, January, February. And along with that incredibly warm winter gave way to record-fast planting of both soybeans and corn, for that matter, starting late March, early April. And so the seeds have gotten into the ground very, very fast. But we're dealing with a situation. We're not dealing with excessive heat in the corn belt and soybean belt. But I track this weekly, Larry. What I can tell you is that in Ohio, Indiana, Illinois, Iowa, and Missouri, it is so incredibly dry that if we don't get rains soon, and if the temperatures heat up, kind of like they did back on May 20th, you could have a real panic set in where people call into question how big the U.S. soybean crop is going to be. So I just wanted to share that kind of fundamental background with you.
Well, this is what we're expecting because, as I mentioned before, that you can't go through a crop year without at least one or two scares, and it'll either be too much water or too much heat or not enough water. And if we don't get, like the right amount of water, during June, July, when these things start pollinating, we're going to have some poor crops, and that's going to cause havoc, across the rest of the world. The fact that you mentioned this a few weeks ago, John, when that December corn was down around the $5 a bushel level at the 618, it's rallied well over $2,000, in a matter of a few weeks, and still looks like it has a long way to go. Wheat still looks positive, so most of these look pretty good.
Very good. All right, Larry.
Thanks for calling in, my friend, and I hope all is well.
Much. I do appreciate it. We'll keep our fingers crossed on $15 beans.
Okay.
I'll see you.
Okay, thanks a lot, John. Okay, now we need to take a look at some commodities that haven't been doing very well, and one of them is cotton. If you recall, last year cotton was trading at $2.20 a pound, and now it's down around 73 cents a pound. And if you think these things can't collapse, this is a perfect example of it actually doing it. And it's nothing more than what happened. All these charts look alike, folks, whether they're bonds, sugar, cocoa, coffee, apple. They all have periods where they go exponential and then they end badly. I haven't seen one yet that didn't apply to Isaac Newton's second law of motion, and that is for what goes up must come down. So we need to always keep that in mind when we're looking at things that go straight up, or things that come straight down. They usually bounce. W.D. Gann used to have a saying: "Is that don't be afraid of high." That wasn't W.D. Gann; it was Jesse Livermore. He said, "Don't be afraid of high prices, folks. They're there for a reason." And he said, "Don't be afraid of low prices, folks. They're there for a reason." What he was saying is just nothing more than supply and demand, and that's really what these charts are telling you. Is that they're going up and down, and that's what they're supposed to do. All I'm trying to do as a technician is to look at the price of the bars and look at the patterns to see whether these things are supposed to go in the direction where I think where they need to be where they need to be going. Now we need to take a look at the dollar index, and I lost it. Just a second here. Hopefully I'll get it back. And I'll just try to make a little filler here till I get the dollar index back, because we had that big ABCD pattern up there, and we've had a nice correction of a little more than a point. That's not enough as far as what I can see. I think we're going to go, and make a little bit more of a correction, but we will have to wait and see. The dollar index, completed the big ABCD that we looked at, several times, and now we're having the first correction. This will be an important correction. We're only down 4 days from the high, and so that tells us that we're probably getting ready, to have a little bit of a, snapback rally in the dollar index. It might even get the euro down into that, 124 level, one more time. And this is just this money moving. That's all it is, folks. And whether it's moving into stocks, bonds, or futures, this is what the dollar index is doing. It's telling you this, and we're watching, the euro and the pound and the Japanese yen, all of these, fit into the overall scenario of where money moves. And as Steve mentioned on his show yesterday when he did his long-term marathon, the fact that Japanese yen has come down into that 786 support, several times, and that makes it a very, very important thing to, keep under your wings as far as what it should look like. But we're looking for the dollar index to come down to, hopefully, that's a really bad trading word, by the way, hopefully, but to come down into that the 80 level, 80.50 to 80 level, which would be a 61% retracement off of the February low. Now remember, our mentor and leader and hero, Tom O'Brien, has been bullish, the dollar index since way back when it was trading at 73, and we've gone well above 15%, and we could get a pretty significant correction if in fact the market corrects even more than that. But until that happens, we just have to assume that we're looking at something that will be in the neighborhood of about 80.50 on the U.S. dollar index. Now, there's another commodity that we missed buying by just a hair's breadth a few weeks ago. Actually, we missed it by about 3 cents, which isn't very much, and that's the natural gas contract. And what we're trying to do here is to watch the 61% retracement coming in here on the natural gas, which comes in at around 220, and that's per cubic feet. I believe that's how they calculate that contract. I'm not even sure. I just trade it. Anyway, we have a 61% retracement coming in at the 222 level. Now that's a pretty significant number, being 222, because it's Gartley on page 222 of Gartley's book. That's where he described the Gartley pattern. So 222 in the natural gas is going to be interesting support. And what you'd like to do is to see it get there and stay there for a day or at least 2 days, and give you an idea that you're not not risking anything with the wide-ranging bars. That's the main thing that we want to keep looking at as far as the things that we're following each day. We have a situation in the stock market that's very important because of that P index date. I just someone instant messaged me and asked me about the P index date again. Frankly, folks, I don't know. I don't know whether it. All I know is that when you have 16 cycles coming together like we had on the 6th, I don't know if they released the bearishness on the 5th that gave this incredible move that we had yesterday, the biggest move of the year, or it was a day off and it was a topping day coming in tomorrow. I'll know in a day or two, but right now it's just too early to go. Yesterday I was thinking it was going to make an equal move like we made off of the solar eclipse, but we went up and made the 786 retracement of that move. It expanded. And this is what trading is all about, is taking the responsibility for this. And when you're wrong, you wait till the next day. That's why I was saying you look at 1308 yesterday. It went down to 1302 after that. It didn't go down very much, and then it went back above 1313, which is where the stop should have been, and it gave you a chance to sell it at a higher price, at another time. And that's the beauty of what we're trying to do when we're looking at these things. Now, I need to show you the euro, because the euro is the single best thing to trade versus the U.S. dollar, and we've had a big move in the euro. I want to show you where it is, on the daily basis, and I want to show you, where we are intraday, because we've hit some, important spots. The bottom we made down at the 123 level was a beautiful 1.27 expansion, and the market had been, incredibly, oversold. That was coming in at the same time that the dollar index was making the AB equals CD, and because the euro is 53% of what the dollar index is, that's one way you can trade the euro, is by watching the dollar index. You can either, do the ETS for the dollar index or do the euro itself. But when these patterns hit, that's what you're looking for as far as places to be, either a buyer or a seller. Now, what I'd like to do now into Tiger TV is I want to show you how the high was made today, because the high today that came in was a perfect retracement of the high from mid-May. In other words, when the euro was up around the 128 level, we came straight down in a beautiful ABCD format and stopped right at the 1.27 at that 123 level, and then we made an AB equals CD pattern to the upside, and it went right up to the number today at 126.22. The high was 126.25, so it went 3 ticks above that, and immediately dropped 80 pips, which is $1,000. And so this is a very important number that we're looking at here in the euro, because if that's the case, the euro could back off all the way to the 124.50 level and still be bullish. In other words, it would just be making another correction, and then we would get ready to move to the other side of this. So this is what we're trying to do on the commodity shows, to show you the flow of money. And and then if anything really crazy comes up, crop failure of some kind, or what do they call that thing when they there's a force majeure. We always used to call it force majeure, but a force majeure is when the government says, look, we can't deliver coffee or we can't deliver cocoa. It's really it's a rotten scam, because that means they're trapped and they just can't fulfill the contracts, and so the speculators end up, getting the raw end of the deal. Much like what happened with MF Global, but with MF Global, they basically robbed the bank. Folks, let me tell you something about if you think Madoff did a bad thing, what Corzine did, he basically was like Jesse James. He robbed a bank without a gun and a mask. He hasn't gone to jail. Anybody that goes into a 7-Eleven and steals a candy bar will get 5 to 10. And I'll bet you $1 spends no time in jail. We've got a break. 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, I've put into Tiger TV the 60-minute chart on Treasury bonds. And the thing to look at here is you'll notice that over the last few days we've only had 3 very shallow rallies where the market would rally just about 3/4 of a point. And then now we've traded down to the 61% retracement of that last low that we made in late May. So this is what we're looking for to see if the market's going to rally back up to the 618 level. And right now the 618 level is coming in at around 150.27. Now that could change because the market, might go down a little bit lower than the 61% retracement would be. It would be a little bit lower, but we'll follow it as we go through. Now, the TBT, I'm going to place that into the Tiger TV also, but it's frankly, it's really an easy one to see. We have a 61% retracement coming in at around 15.23. The market right now is trading at around 15.86. So if we get to around 15.23 in the TBT, I think you could buy that and risk a point. And I really, I might miss this trade several times before I get it right, but I really believe this is going to be the trade that is going to be the best trade probably of the decade, as near as I can tell, because these people are borrowing money, at very, very small amounts, and the people that are lending it to them, I believe, are, really, how can you lend money out at 10 years at 1.4%? I just don't understand that. That means that they're looking at massive deflation. One of my favorite stories with Mark Douglas. Give me a few minutes since I'm on the soapbox. I was visiting Mark in Chicago, and it was about 1:00 in the morning on a Saturday morning, and we had been out with dinner and a couple bond traders and stuff, and I was staying with Mark in his condo, and we got on the elevator, and there were 2 gentlemen on the elevator, and the one gentleman had a baseball cap on, and he says, "Hey," he says, "do you ever loan money to your kids?" And I said, "No, I don't loan money to my kids. I give money to my kids. I never expect to get it back." And he said, "This is the true part of being a parent." He was telling his other friend, and I looked at him and I said, "Excuse me," I said, "aren't you Ernie Banks?" And he said, "Yeah, damned if I'm not." And those of you baseball fans, Ernie was one of the top 500 home run hitters of all time in the Hall of Fame. He's Mr. Chicago. And anyway, he gave me his business card and invited me to come to Wrigley Field to spend the day with him. And I'm a big baseball fan, but my good friend from Alabama was a Ernie Banks. He was a god to Jimmy, and so I gave the day to Jimmy, and he spent the whole day at Wrigley Field with Ernie Banks, and it was a lot of fun. So it used to be one of the old things that I remember of hanging around with Mark all the time. The fellow that was on the elevator with him was Bob Love. He was the center for the Chicago Bulls. Anyway, it was. Oh, by the way, those of you that sent out the white light for my friend that had quadruple bypass surgery, he came through it very well. He's home after just 2 days. And so he's doing pretty good, and I wanted to thank everybody for that. That's one thing I did want to do. So we want to finish the show here to let you know that we need to watch this retracement in the gold. We need to watch the retracement back in the Treasury bonds, and also if the TBT pulls down there, I really believe we got to get in there. My stop might have been a little bit too close, but that's the way it goes, and keep an eye on that. And we want to see. If the stock market closes really good today, up above the highs of the day, and we don't go higher than we did today tomorrow, then the P index day probably came in on the 7th instead of the 6th. So that's it. Have a wonderful day, folks. And I will put a chart for Apple into the room as request. And everybody have a wonderful day, and may God bless.